and we are now joined by Mehrab Irani, General Manager at Tata Investment Corporation, who is joining us to talk to us about Diwali and, of course, trading. Mehrab, in the year gone by, we have seen some metal stocks really sizzle and give great returns to investors. Do you think in the coming Diwali, investors will look back and perhaps another resource space, maybe crude and crude-related stocks will do well? Do you think that could be a bet that could work?
Good evening. First of all, I would like to wish you and everybody at NDTV Profit and all your viewers a very happy Diwali and a very prosperous New Year and a Samvat, very nice Samvat 2073. It's really a very nostalgic feeling coming here in Bombay Stock Exchange and talking here with the audience, with the live audience over here. It's really a very great feeling and a lot of good old memories are attached over here. As regarding the markets, if we see the markets have given a good rally in this year, it has been up and down, but overall the markets have given decent returns. There have been a lot of FII inflows also which have come this year. If you see second quarter earnings have also started coming in. The top line has been growing at close to 3%, while the bottom line is growing at around 6%. And the valuations currently we are trading at close to 18 times forward price to earning ratio, which is around a 15% premium and one standard deviation above the long-term 15-year averages. As regarding metals and other sectors which you are asking, I think if you see the earnings growth over the past few quarters was actually coming not as per the analyst expectations. And some of the sectors which were contributing negatively were primarily global cyclical commodities like metals and ferrous, non-ferrous, etc. However, if you see in this quarter, I think they have, from a low base, they have started reporting positive earnings, and that is what is giving a little fillip to the market. But overall, if you see the earnings season, they have been quite muted. A lot of large cap in a lot of sectors like technology have disappointed. There is serious problems of growth over there in that sector. Consumers numbers have been slightly disappointing. If you see, there has been volume growth has come down, and even in certain large cap consumer stocks, the volume degrowth has actually happened. The raw material prices are going up, gross margins are coming down, the advertisement spends are going up. So there, and the valuations are not cheap over there. Also, if you see the large PSU banks and other corporate related banks, they have not been giving out good results, and still their NPA and stress are continuing to go up, and the problem areas are still not probably solved, and maybe at least 1 or 2 more quarters of pain are left over there. So yes, the valuations are slightly on the premium, and a lot of global liquidity has actually helped the market. If you see, FIIs have been very generous in the last few quarters, and that has actually resulted in liquidity flow being very good. And if you see in the US markets also, in next few days, I think the first week of November, the US elections are there. If Clinton comes, obviously it will be positive for the markets. But if Donald Trump were to get elected, then maybe the markets will look at it as slightly negative. And if you see the FI inflows, it generally comes when the current account deficit is high in the US markets. So that time a lot of money comes into emerging markets, and also when the Fed is having an accommodative monetary policy. However, going forward, Fed has also said that they may slightly, change their stance slightly on the inflation stand. If you see the inflation over there has come down, and if you see the 10-year US Treasury yields have actually hardened by 40 basis points over the past few weeks, from 1.4 to 1.8%. So FI inflows may slightly get affected in the coming weeks. So I think these are all the factors which are playing in the mind of investors at this point of time.
Mehrab, just on a Diwali to Diwali basis, last year to this year the returns were just about 10%. The year before that, returns were about 9-10%. So you expect that the next year could be a better return year, at least for the large cap space. Mid caps, however, continue to deliver greater than 20%.
Pankaj, sorry, the line was not clear. I could not hear.
Right, Mehrab, what I was asking is that Nifty has given about 10% returns, and last year it has given about 9% returns. That's a year before that. Do you think this year will be a good year for the large cap space?
If you see, Pankaj, over the last 5 years, the earnings CAGR for the Nifty has been only 5%. So more actually the revaluation has happened. The PE has actually expanded. As I said, we are almost trading at 15% premium PE valuation to long-term averages. So I think now if the growth has to happen, then the earnings growth has to happen. And certain large cap stock sectors are not showing, the positive earnings momentum which we would require. It is basically the global cyclicals and certain local cyclicals like cement and metals which were actually showing very negative growth. Those are actually contributing more than 40% of the earnings in the second quarter. So that's a kind of a dead cat bounce or something like that, if we can say. But a lot of the other large cap sectors like technology, pharma and consumers, I think they are not showing great amount of earnings confidence at this point of time. So unless that happens, it's very difficult for the market to get re-rated further from the current levels.
Right. You have, Diwali, of course, also becomes a year and, everybody tries to look at their returns from last year. What is the sort of financial discipline that you want to follow? What are the changes that you would do in your investment style, in your portfolio style, starting this Samvat 2073?
Yeah, sure. We would position the portfolio more towards, I think, the autos are doing quite good. So I think autos will be one of the sector which I would continue to be bullish. Passenger vehicles have been doing quite good. Even the other sub-segments, the two-wheelers numbers are also been decent. So autos will be one of the positive sectors. I would also look positively at private banks, particularly the retail-oriented banks. There 20 to 25% growth is happening, and if different segments, whether you see credit cards, home loans, personal loans, I think all those segments are growing very fine. Even the NBFCs as a space has been doing very good. So I think there I will continue to remain positive selectively, obviously. And also cement. I think cement has a lot of operating leverage going forward. I think a lot of the expansion has already happened over the last 2 to 3 years. And now I think they are favorably positioned to take advantage of the operating leverage and increase in the margins. So these will be some of the sectors which I would positively look at in the new Samvat 2073.
Right, and the mid-cap index and the rally that it has had from the start of 2013, that should continue. Flows should continue in the mid-cap space, which will lead to better prices, or now the valuations are looking slightly richer over there.
If you see the BSC small cap index on a trailing basis, it is trading at more than 60 times price earnings. So I think that is simply not justifiable. There has been, analysts are projecting almost 30 to 50% increase in a lot of the mid and small caps. So I think as a space, they have been quite slightly overheated because of a lot of the liquidity and a lot of opportunities not being available in the large cap space. So selectively, yes, bottom up mid caps and small caps, I think as a team will still underperform in the next year also. But I think it is time to be slightly cautious, and we have to be very stock specific in the small and mid cap space.
Right. Mehrab, what do you do with some of these real estate stocks? Because some people believe there's great value. Not just because of their land banks and other assets, but the fact that they have been beaten down so much and they still have running businesses. There is a belief that now with the black money getting out of the system, sales will start picking up. Now the prices have also rationalized quite a lot. Are there any picks that you have from the real estate space, and what's your view on the real estate space?
I was cautious on the real estate space, and I would continue to remain cautious. I think it's very difficult to value them on a land bank on NAV basis. They have serious cash flow problems. The debts are very high, interest rates are very high, and it's really very difficult to predict, when the cycle will turn. We read that sales are down by 30 to 50% across different large developers. So I am not very sanguine about that sector at this point of time, and I would actually avoid that at this point of time.
Right. Mehrab, you said that some consumer names and some pharma names are not expected to do very well, and you like private banks. What about a space like NBFCs? Some of the NBFCs have done very well so far. Do you think they'll keep up their strong performance? Is that also a safe haven that investors can look at for returns perhaps better than the indices?
Nothing is a safe haven in the market, but yes, NBFCs as a sector have done quite good, and the growth as of now is very good. A lot of their sub-segments, whether you see housing sector, they have done quite good. A lot of growth is happening in the retail housing finance, even in LAP, a lot of growth is happening. Credit cards are growing, personal loans. So, NBFC and private banks as a space have done quite good. However, when we invest in NBFCs, we have to be a little cautious, because these are little early cycles, So for retail credit, they have actually grown very fast over the last two to 3 years. So any kind of NPA or stress will not show up now, but it will show up only after 2 to 3 years. Even if you see a lot of the small finance banks, a lot of the microfinance companies, those have also grown very fast. And it's difficult to believe, in a country where secured lending, like all the large corporates and the PSU banks have actually done secured lending, and those are currently faltering and a lot of stress is over there. So it's difficult to believe that unsecured lending will not have some amount of stress. So yes, I think as of now, the growth is good, the numbers are good, but we have to be careful, and maybe just now it's early cycle, but after 2 to 3 years, some kind of problem can arise in that sector as well.
Right. What does one do with pharma names if one already has them in the portfolio? They may be out of favor now. Do you think they'll remain out of favor for the next couple of years? Say if you have a Sun Pharma or a Lupin in your portfolio, and you are seeing some negative returns on your buying price, do you still hold it or do you look to exit? What's your advice?
Yeah, if you see a lot of the large cap pharma and mid cap pharma, they all have faced a lot of US FDA heat in the last year. And the valuations are certainly not cheap over there, and many of the stocks have actually underperformed also. So I think pharma will be more of a bottom up, and I think we have to be very selective while investing in pharma. It will not be like a straight ride which it has been over the past few years. So I think selectively, yes, pharma always remains a good team, but we have to be very cautious while selecting stocks over there at this point of time.
Mehrab, till now in the last 4 years, SIPs have done pretty well. Say if somebody has yet not invested into the market, is looking at this Diwali to get some asset allocation, do you think SIPs would still be a good option for any investor who is starting, irrespective of valuations?
Yes, Pankaj, see, there is no time for SIP. SIP is systematic investment plan. I think anytime somebody can start and invest. The beauty of SIP is that it gives the rupee cost averaging benefit. So whether the market goes up or market goes down, you keep investing. There is a discipline in SIP. Once somebody sets up an automatic account, he doesn't have to look every month or care about it. Automatically the amount gets debited from his salary or from his bank account and gets transferred to the SIP. And he gets the biggest benefit of rupee cost averaging. Plus psychologically also, he doesn't have to, it's very difficult to draw and write a check during a bear market. But in SIP, it automatically happens and people get the advantage of buying at lower prices. So I think SIP, anytime is the right time for SIP. And I think if somebody has not done, then today, this Muhurat is a very good day to start an SIP.
And say if somebody is looking for asset allocation within the equities, what should be the asset allocation between mid cap, large cap, or it again really doesn't matter if you're doing a SIP?
In an SIP, I think if somebody is a new investor, then he should first, I think, more do towards large cap and maybe multi-cap funds, and mid-cap maybe a small portion initially because of the inherent volatility. And somebody who has a lot of long-term money, if he has long-term goals, if he has short-term goals, then yes, he has to do more in large cap. But if somebody has long-term goals, maybe after 10 to 15 year long-term goals, like a marriage of his children or his own retirement or something like that, then yes, he can be a little more aggressive and put some money allocation in mid and small caps also. Because SIP is something where, current valuation is not very important, because we are going to invest for next 5 and 10 years and invest across cycles, bull markets, bear markets, good markets, bad markets. So automatic averaging will happen and the compounding benefits will come out.
Right. Just a last word, Mehrab. In Samvat 2073, you think Nifty will hit new highs in the next 12 months? Is that something which you are looking at?
Yes, I think it will hit new high, but not. But currently, I am slightly cautious. I think maybe after a few months, at that point of time, once the earnings revival happens and other sectors start contributing and the stress assets in the banking sector comes to some kind of resolution, I think that time it will happen. Maybe not in the near future, but maybe after a few months.